Justin here with 4J Real Estate, joined here again with Ryan Larson from where? Guaranteed Rate. You can find him on all the socials at Ryan Larson Lens. That's my favorite saying, Ryan Larson Lens. Great alliteration.
Tell your friends.
Well, my friends are your friends. Let's talk about ARMs.
So you kind of have two different products when you're looking at home mortgages. You have fixed rates and you have adjustable rates. Fixed rate is exactly what it sounds like. It's fixed for a 15, 20, 30-year period. And then you have adjustable rates that are fixed for a shorter time, so a little more risky. But with that, you get a lower interest rate as well. So it's kind of a little give and take, just kind of depending on what your risk basis is or kind of how long you plan on being in the house.
And why are adjustable rate mortgages so in vogue right now?
In vogue because interest rates are up in general. So you'd get a 30-year fixed rate at, say, in the jumbo section, so a loan amount above 650 is where adjustable rates right now are most prevalent. Say you're at 6.5 on a 30-year fixed mortgage, you could be down to 5.5, 5% on a 5 or 7-year ARM. So if you think rates are going to go down in the near future and you're going to refinance anyway, or if you're just not going to be in the house for more than 5 or 6 years, a 7 or a 10-year ARM make a lot of sense and save you a lot of money on interest.
And what happens after 7 to 10 years?
A lot of people tie adjustable rates with balloon mortgages. They're not the same, not even close to the same. Adjustable rates mainly are for a 5, 7, or a 10-year term. After the 5, 7, or 10 years, it basically floats to what the current interest rates are doing in the economy. So you're fixed for 5 years and then you're going to float. Depending on the structure of the ARM that you choose, it's going to renegotiate every 6 months, every year, every 5 years, kind of depending on what the structure is. But the note is not payable upon the 5, 7, or 10-year period. You basically are just going to float to what the market rate is at that point.
And is there a maximum amount of increase that can happen in 1 year?
Yes. Normally, it's a 1 or 2%. Sometimes you see a 5% max increase. But the entire ARM will have a max of 5% as well. So there's different ways to structure the ARM, but definitely something to ask if you're serious about ARMs, asking your loan originator, what the structure is of the ARM, so you can also shop around for the best deal on those structures as well.
Great. I think I now know what an ARM is.
Do you?
I think so.
Do you want one?
I mean, I have two.
Oh. You want to refinance it?
I would like to refinance them. All right. Thank you, Ryan.
You're welcome.
There you have it. Everything you need to know about an adjustable rate mortgage and ARM. I'm Justin with 4J Real Estate. You can find us on all of the socials at 4J Real Estate and Mr. Larson at Ryan Larson Lens. Thank you again for joining us.
You bet.
Fun time.
Absolutely.
See you next time.
Mm-hmm.
Bye.